What's up, everybody? It's Monday. I went through my list of stocks. See if my connection is in. See if there be a delay. Okay, here we go. And I went through my list of stocks. I'm still in Boeing. Remember, I had a weekly signal on that on Friday. Said weight gain. Still in that. Today, I'm looking at Zoom. Zoom is giving me a buy signal. So I'm looking to buy a call on Zoom. Right now, Zoom is trading at 314.34. Remember, these green checks indicate the price range that I'm comfortable with risking. And I risk anywhere from $100 to $200 on a contract. In the case of Amazon, Google, Tesla, and Shopify, I'll go in between $200 and $300. You've seen me do Amazon trades at $400 per contract, but typically in most stocks, I'm in between the $100 and $200 range on an individual trade. So that's what these checks indicate. They pretty much indicate my price range. These contracts within this price range are typically out of the money. They are out of the money contracts, meaning wherever the stock price is on the call on the bet. If you're betting for it to go up on the call side, the stock price is lower than what your strike is. These are your strike prices. Strike prices mean the price where you're betting for the stock to go at. So if the stock is at 314.26, they have a 320, which is pretty much $6 above where the stock price is. They have the 325, 327, 330. You have people who are buying and selling these contracts, betting on where the stock goes. And on the put side, which means that you're betting for it to go down, they also have strike prices. You can see here you have the 190 strike, where people can bet whether or not Zoom is going to go to 190. If Zoom is at 314, the at the money contract would be the 315, because it's close to where the stock price is. And you can see here, it's $605. These numbers here you have to multiply by 100, because every contract represents 100 shares of stock. Options give you the right but not the obligation to buy shares of the company. Most options traders do what I do. They just sell the contract for the profit, or they may take a loss on the contract. Most do not exercise their options unless they really truly want to own the stock. So that's what these are. These are contracts. But the way that I use options, I use it as an instrument to speculate or bet on where a stock is going to go day to day. So that's just a little explanation for you guys who have just subscribed. This is what I do. I'm just betting on the movement of a stock, be it up or down. And if I'm betting for it to go up, as I did in Boeing on Friday, I'm in the 245 call on Boeing. I paid $90 for that contract. So I'm in the 245 right now. It's at 235, so it's $10 out of the money. So for me to be a winner, there's the contract. Right now I'm down $40. For me to be a winner, this line here indicates where I need for the stock price to go. Now I could go to 240 and this contract could very well double in value. But by Friday's expiration, this stock needs to go to 245 or above for me to be a winner. If it doesn't, I'll be a loser. Because every contract has expiration dates. I trade weekly options, so if I get in a contract on Friday, I got 7 days for this stock to make its move. So it's a waiting game for me. So we'll see what this position does. If it doesn't hit 245, I lose the whole $90. That's the risk. The risk can't go beyond $90 in this trade. So whatever you pay for the option contract, that's what you have at risk. Let's go back to Zoom, see what it looks like. So Zoom here, I'm getting a buy signal on the 1-day chart. 314. So I'll be looking at the 330. 330. I'm gonna go to 325. Yeah, 330, 335. Just doing some calculations here. The volume is in the hundreds, not really heavy. It's starting off as a quiet week. You got some stocks that's going to report earnings. So if I made the bet that it's going to go to 330, okay, right now I just traded down to 313. That's a 5% move. It's early in the week, so say for instance if Zoom goes to 320 tomorrow, that's a 2% move, roughly 2%. This contract, the 330, may go up 50 to 100%. I really don't want to go that far out of the money, but like I said, it's early in the week. So you're going to see excuse the background noise. I am at home, so just disregard that. But let me see. It pretty much took out these lows here, and that's what stocks seek to do. They seek to take out highs and lows. Let's see, on Wednesday of last week it hit 313.50, and right now it's at 314.27. So I'm going to get in this trade and see what happens. Jump. But I'm gonna go. Let's see if I can get in at 225. Put in a bid to get in at $200 on the 225. So essentially I'm $10, $11 out of the money away from where the stock price is. We'll see if that takes. If it doesn't take, I'll try to get in tomorrow morning. And I'll probably get in at a better price anyway. But early in the week, the options are more expensive because you have more time until expiration. In this case, I would have 4 days to expiration. So we'll see if that takes. If not, I'll execute it in the morning. They're asking, let me explain that. The ask price is the people who hold this contract, what they're asking for. So if you are a holder of this contract, you're asking $240 for this contract. If you're trying to buy the contract, you're on the bid side. So this is my bid here. I'm bidding $200 for this contract. I got a signal on Riot, but I don't feel too strongly about it. Riot is a proxy of Bitcoin. It typically goes wherever Bitcoin goes. And surprisingly, Coinbase volume is light. I mean, it's starting to pick up. Okay, I can see it. The volume is starting to pick up. But it's light. I thought it would be in the thousands, being that it's it's a proxy for Bitcoin and cryptocurrencies. It's an exchange, so I can't wait to make my first trade on Coinbase. I've made a few trades on Riot. I've made some money on that. They also have a Bitcoin ETF that's supposed to come out. I'm looking forward to that too. So Zoom. Okay, the ask is at 230. My bid is still at 200. Let's see if they take my bid. It's at 210. See, this is just what they call a auction type thing, but it's all computer based. You get a bunch of bids in, you get a bunch of ask prices in, and then they see who meets, and then you have a trade. Now it's down to 215 on the ask side, so it's just a battle between who's willing to buy and who's willing to sell. Again, if they don't give me my $200 price, I'll get in it tomorrow, which I have no problem with waiting. It's going to be many signals, many opportunities. So the name of the game is patience. That's your weapon in this game. You got to have patience. So they got me in at $200. Let me show you. So I'm in on this contract at $200. So this is this is the 325 call. And it's at 314, so $11 out of the money. And again, like I said, it's a signal on the 1-day chart, so it's not something that I think is gonna shoot through the roof. But I may double up on it tomorrow in terms of profit. We'll see what happens. And I'm still in Boeing, which that was a weekly lineup. I'm in the 245 contract. It's at 235, so it's $10 away from my strike. Again, I got in at $90. It went as high as $163 today. You can see here, this is a 2-hour chart. Got in at 90, hit a high of 163. If it gets around here, I'll double up on my money. So we'll see what happens with that. Make sure I didn't miss it. So Riot, Zoom. I'll wait on the Riot. But we'll see what happens tomorrow. Thanks for listening. Yeah, have a good one.